We've got John on the line from Wheatley, Ontario. I think that's down there near Windsor. John, go ahead.
Yes, sir, Andrew. Hello. It's 10 kilometers east of Leamington, the Heinz plant. Good to talk to you, David. You're my favorite portfolio manager when it comes to U.S. stocks. And I'd like to ask you about the railroads. That's the emotional part of my portfolio, which I know that flies in the face of investing. But I was wondering if you could rank the 4 American railroads, Norfolk Southern, CSX, Union Pacific, and Kansas City Southern, in sort of the order that you'd buy them if you were investing. Thanks, guys.
Okay. Thanks a lot.
Okay, so just to set the stage here, we know that as the market started to weaken last spring, one of the flies in the ointment that a lot of people pointed to was the transports, and that the transports were behaving very poorly. There was a camp that said, well, they're behaving poorly not because the economy is weak, but because crude by rail is going to slow down, and that's been a big driver for growth. And I think that there was truth in that. There was certainly truth in the fact that people were concerned about overall growth in the economy.
And there's an ETF that tracks the transport.
That's right.
Stocks.
Now, what you can see if you put up a chart to today, I can't see the end of the chart there, is that in the last 4 weeks, we've started to see a turn in the transports. Okay. And that's come from the truckers. It's also come from the rails. So this is a third camp that we've been focused on over the last few weeks. We've started to see a change in the industrials and in the transports. And so we have some exposure to the transports that we've added over the last little while. Now, if I were to pick sort of one, I probably would pick something like CN Rail, actually, which has a lot of north-south traffic. And I think that you do pretty well with that. Certainly, the exchange rate doesn't hurt them on the earnings, and I think that looks pretty good. I think that if you had to pick a U.S. name, probably Norfolk Southern. But I also like the truckers, and I would consider doing something like buying the IYT, which is the iShares Transport ETF.
Yeah, we just had a look at that
right.
one. Yeah.
And there you're buying a basket, and it's going to get you exposure to the logistics companies, which are picking up, the truckers, and the rails. So that's sort of where I would go.
To play that theme.
Yeah.
Robert is calling from Victoria. Robert, go ahead.
Good morning. Thanks for taking my
Our
call.
pleasure.
My question is on Fairfax Financial. David, I believe you've added it to your portfolio as of year end, and it's performed very well in light of the market's performance. It's at all-time highs now. Do you hang on to it and hope that Prem Watts' deflation hedges pay off, or do you sell it, or what are you doing with it? Thanks very much, David.
Well, there's a couple of things to consider here. First of all, so we think there's 3 big things that impact share price performance. 1 is the market itself. 2 is the sector that you're focused in, and 3rd, of course, is the individual security. So I said earlier, we've started to see beginnings of breadth improvement for the market itself. So that's a check mark. Property and casualty within the market, actually in the financials group, is one of the strongest performing groups. And we could talk about Chubb, and you could talk about Progressive. There's a bunch of them you could talk about, and Fairfax, of course, fits in that bucket. So you've got some tailwind from a sector perspective. And then there's Fairfax itself, extremely well managed. They've got very interesting investment strategies within the portfolio. They're making investments overseas. I think this is a great name to buy and hold here. If we get a firming market, I think that the Fairfax does extremely well.
What a character Prem Watts is. I remember years ago he said, if you're a shareholder, please don't bother us. We're just trying to do our job. Don't be pestering us. I guess sell the shares if you don't like what we're doing. Ernie is in Victoria. Another caller from Victoria. Go ahead.
Oh, good morning. Yeah, I'd like your opinion on Manulife, please. Thank you very much.
Right.
Thanks very much.
So, Ernie, when it comes to insurance, we are recently less enamored with the life insurance companies. We prefer the property and casualty companies. So we do have some holdings in Fairfax. And I mentioned Chubb a little bit earlier, who's recently, tucked in ACE. In the life insurance companies, the difficulty is if you think interest rates are going to stay low here for a while, it continues to be a bit of a challenge. Manulife's pulled back a fair bit over the last few months. I'd like to see the stock get swung around. We look for a couple of things. We're not value investors. We aren't trying to buy something that's out of favor, hoping it turns around. I like to see both the numbers getting better, and Manulife's numbers are pretty good, but I also like to see the share price reflecting the fact that things are improving. And recently, it's been quite weak. So I'd like to see the shares perk up. I would probably look at a Sun Life in the short run before I'd look at the Manulife.
Bill is in Brampton, Ontario. Go ahead, Bill.
Good afternoon, gentlemen,
Hi there.
and my best wishes to you both, and I hope that your family and friends are well. This afternoon, I'm calling about Air Canada. I'm a bit of a bottom fisher, and this seems to be a company that is unloved. But like the PE ratio is looking good. I know the Canadian economy is weak, but I'm thinking low oil prices are a good boost for them. Of all the airlines, they're probably one of the best right now. And so for a long-term value investor, I'm curious as to whether or not you would consider the company, at what point you would buy it. And on a beautiful day like today, gentlemen, I'll leave you with the wish that the road rises to your feet and the sun always shines in your face.
Well, thanks for that, Bill. So we'll start with the sector. The airline sector falls for us within the sort of the travel and leisure group. This is a sector that we've started to see some improvement in over the last couple of weeks. Within that, airlines in general have been behaving better and actually held up quite well through the decline. Air Canada, with its leverage to the Canadian economy, has been an underperformer for probably for that reason, right? Everybody benefits from the lower energy prices, but there is concern around, business travel. Certainly WestJet has had its issues. And when I look at my choices as an investor, I would prefer to invest in an economy where the delta is getting a little better as opposed to the delta is getting a little worse. So to put it in perspective, in our equity portfolios currently, about 80% of our holdings are in U.S. stocks. Now, we recently hedged our currency back to Canadian dollars, but I'd prefer to focus in the U.S. I would try to steer you more towards Delta, DAL, which looks more interesting, or UAL, or even overseas Ryanair, RYAAY. I think in the near term, I'd have less exposure to Canada than the U.S.
And there we have it. Ooh, nice comp. Yeah, you can see that Air Canada's really underperformed Delta lately. Wow, really since the late summer. Stay tuned. Past picks are coming up next. David lost money on Biogen, but Starbucks worked out just fine. That's after the break.